Let's get one thing out of the way before we start. This is not a get-rich-quick list. This is not financial advice. And this is definitely not the part where I tell you to mortgage your house and put everything into a single ticker because a guy on the internet had a feeling. If that's what you're looking for, there are plenty of other corners of the internet happy to oblige. This isn't one of them. What this is a breakdown of 5 companies worth paying attention to in 2026. Not because they're guaranteed to go up. Nothing is guaranteed to go up. But because they sit at the intersection of real structural trends, actual business fundamentals, and the kind of narrative momentum that tends to make markets pay attention. Think of this less like a shopping list and more like a watch list, a starting point for your own research, because the best investment decision you ever make will be one you actually understand, not one you copied from a YouTube video. With that said, let's get into it. Number 1. Nvidia. If you've paid any attention to markets over the last 2 years, this one is not going to surprise you. Nvidia has gone from a company most people associated with gaming graphics cards to arguably the most important piece of infrastructure in the global AI build-out. And the reason it keeps showing up on every watch list, every analyst report, and every financial conversation in 2026 is because the demand story hasn't changed. Here's the simple version. Every major AI model being trained right now, every large language model, every computer vision system, every recommendation algorithm powering the apps you use daily runs on chips. And the chips that the industry has overwhelmingly chosen to run on are NVIDIA's. Specifically their H100 and now H200 series GPUs. Microsoft, Google, Amazon, Meta. Every hyperscaler on the planet is spending tens of billions of dollars building out AI infrastructure. And a significant portion of that spending flows directly to NVIDIA. The company isn't just riding the AI wave. It is, in many ways, the foundation the wave is built on. The risk here is valuation. NVIDIA trades at a premium that assumes the growth story continues at an extraordinary pace. If AI capital spending slows, if a competitor closes the gap, or if demand softens for any reason, the stock is priced in a way that leaves very little room for disappointment. It's not a boring, safe, sleep well at night kind of stock. But for understanding where technology spending is going in 2026, it's impossible to ignore. Number 2. Amazon. Most people still think of Amazon as an online store, which is a little like thinking of a skyscraper as a lobby, because the part of Amazon that actually drives its financial engine isn't the part where you order paper towels at midnight. It's Amazon Web Services. AWS is the cloud infrastructure backbone for a staggering percentage of the internet. Startups, enterprises, governments, hospitals, an enormous portion of the world's digital operations run on Amazon servers. And AWS doesn't just generate revenue. It generates the kind of margins that make the rest of Amazon's businesses look almost irrelevant by comparison. In 2026, AWS is becoming increasingly central to the AI story as well, because training and running AI models requires cloud compute. And Amazon is aggressively positioning AWS as the preferred cloud platform for AI workloads, competing directly with Microsoft Azure and Google Cloud for what is shaping up to be one of the largest enterprise spending categories of the decade. Meanwhile, the core retail business, which everyone understands, continues to generate cash and improve its margins as Amazon's advertising business, which most people don't think about, quietly becomes one of the most profitable advertising platforms in the world. Amazon is not a flashy stock. It doesn't have the dramatic narrative of a pure-play AI company, but it's a business with multiple massive engines all running simultaneously. And in 2026, those engines are accelerating. Number 3. Eli Lilly. This one requires a slight detour away from tech, because not every major investment theme in 2026 is about artificial intelligence. Some of them are about biology. Eli Lilly makes drugs. Specifically, over the last 2 years, they've become the dominant force in one of the fastest-growing pharmaceutical categories in history. GLP-1 medications, which you probably know better by their brand names. Mounjaro, Zepbound. The class of drugs that started as diabetes treatments and have since been found to be remarkably effective for weight loss, with early research suggesting potential benefits for cardiovascular disease, addiction, sleep apnea, and a range of other conditions. The global obesity market alone is estimated to be worth hundreds of billions of dollars. And Eli Lilly, alongside its main competitor Novo Nordisk, is currently supply constrained trying to keep up with demand. That's the kind of problem most companies would love to have. The risk is that this is a competitive space. New entrants are coming. Generic versions will eventually exist, and pharmaceutical companies live and die by their pipeline. But in 2026, Eli Lilly's position in one of the most commercially significant drug categories in modern medicine makes it a company worth watching closely. The science is real, the demand is real, and the revenue growth has been extraordinary. Number 4, Google. Google's parent company has spent the last 2 years in an uncomfortable position for a company that has dominated its industry for 2 decades. The rise of AI-powered search and conversational interfaces raised a genuine question that markets took seriously for the first time. Is Google's core business model at risk? It's a fair question. If people start getting their answers from AI assistants instead of typing into a search bar and clicking ads, the economics of Google's advertising engine, which funds everything else, start looking shakier. But here's what the doom narrative missed. Google is not a passive observer in the AI race. It built DeepMind. It developed the transformer architecture that underpins virtually every major AI model in existence today, including the ones people are using to supposedly replace Google Search. It has Gemini. It has Google Cloud, which is the 3rd largest cloud platform in the world and growing. And it has YouTube, which is quietly one of the most valuable media and advertising assets on the planet. The real story with Alphabet in 2026 is execution. The assets are there. The talent is there. The infrastructure is there. The question is whether the company can move fast enough to integrate AI across its products in a way that reinforces rather than undermines its core business. For a company of its scale, that's genuinely hard. But the underlying pieces are formidable. At its current valuation, Alphabet trades at a reasonable multiple relative to its earnings, which for a company with its market position and cash generation is an interesting combination. Number 5, a wild card, Palantir. This one is going to be controversial, and that's partly the point. Palantir is a data analytics and AI software company that has spent most of its public life being either wildly overvalued or completely misunderstood depending on who you ask. It was founded by Peter Thiel and Alex Karp with a mandate to build software for intelligence agencies and defense contractors. Think the kind of data infrastructure that governments use to track very serious things. It is not a cheerful company to read about, but in 2026, Palantir's commercial business is accelerating in a way that's genuinely worth paying attention to. Their artificial intelligence platform, AIP, is being adopted by enterprises at a growing rate. And unlike a lot of AI software companies that are selling the promise of future productivity, Palantir is selling deployable tools that companies are using right now to make operational decisions. The defense side of the business is also worth noting. Geopolitical tensions globally have not eased. Defense budgets across NATO countries are expanding, and Palantir sits in a unique position as a software layer for military and government AI applications that has very few direct competitors. The risk is valuation and volatility. Palantir is not a stock for the faint-hearted. It swings dramatically on narrative and sentiment, and it trades at multiples that assume a lot of future growth being realized. But as a company at the intersection of AI, defense, and enterprise software in 2026, it represents exactly the kind of structural trend that tends to produce outsized returns for investors who get in early and hold with conviction. So what do you actually do with this list? You research, you read, you think about which of these businesses you actually understand well enough to own. Because conviction in investing doesn't come from a YouTube video. It comes from knowing enough about a company that you don't panic sell the moment the stock drops 15% on a bad earnings quarter. The best investors aren't the ones with the best tips. They're the ones with the deepest understanding of what they own and why they own it. A stock on a watch list is just a starting point. The work you do after that is what separates a good investment from a guess that happened to work out. Markets in 2026 are navigating a complicated mix of interest rate uncertainty, geopolitical tension, and a technological transition that nobody fully understands yet. In that environment, the companies on this list share one thing in common. They're all positioned at the center of trends that aren't going away. Whether that makes them good investments for you specifically depends on your timeline, your risk tolerance, and your ability to sit with volatility without making emotional decisions. And if you're not sure about any of that yet, that's the thing worth figuring out first. Drop in the comments which of these 5 you're most interested in and why. I want to see where people's heads are at heading into the rest of 2026.